It is the last day of the month of October, Eugene, notoriously known for immense negativity and red Octobers and blood on the market. And to the contrary, yes, maybe the last day of the month seems that way, but actually we've had a fantastic month so far.
Yeah, fantastic, wasn't it? I think if we look back over the past month, it feels like heaven on earth. So yeah, I don't feel very scared tonight. Maybe we must look at it tomorrow morning. Maybe the horrendous month of September is over and done, and we're going to have a wonderful Christmas.
Eugene, clearly you've been investing in the right stocks for you to be so happy, because I know not every stock has performed really well. Let's delve into some of your stock picks. I know that you mentioned a little earlier that when we spoke, JD Group has gained around 16% month to date. It is part of your Aura equity portfolio. It is not part of the top 10 holdings, but give us your sense in terms of exposure into the stock.
Yeah, I think JD Group bounced nicely. They had a trading statement which was quite positive today. I also think they have cleaned up that book very aggressively, and the exposure to credit sales or to the retail credit market is slowly but surely coming through. If we look at the M3 numbers we saw this morning, we saw a reasonable kicker. But more importantly, if we look at the credit numbers, we're not seeing growth in mortgages or anything like that. It's personal loans, it's shop cards, and I think that market is slowly picking up.
Eugene, Narina Fasika, I'd like to just ask you, in terms of JD Group, certainly the trading statement today was ahead of expectation currently out in the market. To what extent do you feel that this trading statement is maybe somehow distorted by the inclusion of the Stanlib numbers for the 2 months and the inclusion also of Unitron's Auto and so on, or is it really a fair like-for-like comparison?
Yeah, I don't think, Narina, we know it's not always that clean, and if we drill down, we can see how people to some extent scheme with the numbers. But if you look through it, the company has cleaned up very aggressively, and they have moved themselves strategically into new areas of business that is not dissimilar to the overall business model. So maybe a bit more diversification. And I like that, and I think the positioning is great for the next 3-4 years.
I would definitely concur with this in terms of the diversification, and clearly the market also liked those results today. They were one of the few retail stocks that actually put in a positive performance. And headline earnings per share expected to increase by around 35%, yes. So that is quite a strong performance. Eugene, let's delve into Foschini, which I also know you have slight exposure to, but this stock also had a fantastic run over the past month. It's up around 18%. Are you planning to increase your exposure to the stocks that have really outperformed within your portfolio?
Yeah, it's actually a terrible story. I would have loved to have more.
You're underweight Foschini, if I'm not mistaken.
Say again?
You're underweight Foschini, if I'm not mistaken.
Yeah, I just don't have enough stock. I was scared. The first half trading statement was really good. That market is doing reasonably well, but they got the mix right. I think the mix in terms of fashion was good, and the support that they're getting from the public and on their offering is great, and we're seeing it in the numbers. So pricing at the moment is not too bad. The P's are quite reasonable, maybe just below forward. We see the numbers just below 12 times earnings. So I don't know whether I want to accumulate more at these levels. One will most probably get an opportunity in the market when there's a little bit of a hiccup to buy more.
And Narina, I'm sure Eugene said he was scared.
Absolutely. Eugene, I can't help but to think, your timing is absolutely shocking. You're supposed to be scared on Halloween, on the 31st of October. You weren't supposed to be scared previously. So, but jokes aside, I just wanted to get your sense in terms of Foschini and I guess the rest of the retail space, your expectation for the retail sector, which is consumer sector really still under a lot of pressure on the ground. How do you see that playing out over the near term?
Yeah, I think you've got to play the consumer sector very careful over the next 6 to 12 months. I think we might see a little bit, especially in the lower end of the market, a little bit of credit expansion. I think we saw those trends coming through in Capitec, and we saw it in Able as well. Interesting today that Capitec released, or they're going to tap the market for capital. So from a credit point of view, very selectively, you will see some growth. On the more stable stocks, consumer stocks, I won't get overexcited. I think you've got to be very careful in selecting. We saw the ShopRite numbers today, wasn't very exciting. Pick n Pay didn't excite us either on the retail side. So maybe a little bit of exposure in Woolworths I would retain. And then we've got to keep our ear on the ground for the stocks like Mr. Price when they do have the blips that you start accumulating in that area.
Eugene, your benchmark in this fund is CPI plus 7. Of course, inflation is ticking up quite a bit. We're very close to reaching that target of 6%. Given your holdings, we've got Naspers, Sasol, BHP, BTI, and MTN, and many more. How do you reweight your portfolio relative to what happens on the inflation front? What is your strategy with regards to this?
Yeah, the way we look at the benchmark itself is purely in terms of risk. We believe over the long term, over the next 5 to 10 years, equity should give you in the area of CPI plus 7. That's how we derive at that target. The way we are constructing the portfolio, or the way we have constructed it since the second quarter of this year, has been fairly defensively. You can see there's a lot of BTIs, there are REMGROs. We don't have a lot of resources. Where we have resources, it's very selectively. Maybe a bit more industrials than what one would have expected to see in a portfolio. So the CPI plus 7 is a really long-term target that one would like to achieve in a portfolio like this. So fairly aggressive, but not that aggressive.
Eugene, we don't have much time left, so I'd like to delve into the scariest stocks in your mind. Let's start off with BTI. I know that you see that one as slightly scary because JSE rules are going to change, and then it could be included on the local market.
Yeah, I'm really worried about the way that these inclusions or this index changes are going to occur. I think it's very important that we look at the potential index changes, and then also the index changes with potential index changes within the SWIX index, that it's managed in a really, really careful manner. If we look at a stock like BTI, a sudden inclusion into the SWIX indices will hit the corporate world, and as Nerina will know on the index tracking side, it can create a little bit of it can create chaos. So it needs to be handled very carefully. I'm worried about that. Yeah. It needs to be managed well by the JSE committee.
Fantastic, Eugene. We have to leave it there, but thank you so much for joining us. Great to have you on the program. Eugene Goosen from Aura Funds.